Letting our Zoom attendees fill up the room just for a second, and then we will get started in about 30 seconds, although no one timed me. Good evening to those just joining us on the Zoom webinar. We will get started in just those just joining us on the Zoom webinar. We will get started in just those just joining us on the Zoom webinar.
Marianne, I think you need to turn off the sound on yours.
Thank you. Okay, sorry for that echo. Okay, so we will go ahead and get this thing started. So good evening, everyone. Thank you so much for joining us tonight. For those that don't know me, my name is Jen Tremin, and I'm the Associate Program Director at the Atlanta BeltLine Partnership. If you're not familiar with that, we're the nonprofit entity that works in tandem to deliver the BeltLine vision. So tonight you are joining us for one of our home empowerment workshops. These are free workshops we put on with some really fantastic partners in the city to help share resources that are available to homeowners such as yourself, renters, anyone, just to let you know about different housing resources that are available. So I'm really excited to be joined by some of our fantastic partners tonight. We've been working with them for years on this programming. We have Atlanta Legal Aid and Grove Park Foundation, who are going to teach you all about homestead exemptions and how you can lower your property taxes by filing for them. So before I kick it over to Stacy with Atlanta Legal Aid to give us all the details about that, just a few logistical things. So we are in a hybrid event. So we have some lovely participants here with me in person at Paradise Baptist Church in Grove Park. And then we have a great number of you on Zoom and Facebook Live. So thank you all for attending in whichever way you decided to do so tonight. We will be taking questions throughout the presentation. So just bear with me while we do that. I will give ample time for both our in-person people to have questions and for those that are joining virtually, and I'll just toggle back and forth. We will try to answer all the questions that we can in the time allotted. You will also receive a survey, whether you're in person or on Zoom. Please make sure to fill that out. And any of our attendees that are joining us tonight, you'll be entered into a raffle to win a fun prize. So thanks for joining us. We appreciate it. And Stacy, without further ado, tell us all about homestead exemptions.
I'll do my best. I'm Stacy Reynolds. I'm an attorney with the Senior Citizens Law Project of Atlanta Legal Aid. And as Jen mentioned, we partner with the Atlanta BeltLine Partnership and Grove Park Foundation to provide this information. And just a little quick background, the reason we started doing these is because we at Atlanta Legal Aid, one of the things we were doing was trying to help people make their homes more affordable, dealing with their mortgages and things like that. And we discovered that we were getting the mortgages affordable, and then it was becoming unaffordable due to the increases in property taxes. And so we decided that we needed to start doing some outreach to make sure people understand how the property tax system works and how they can do things to try and keep the taxes as low as they possibly can. So that's why I'm here. One quick thing is that I will be pausing periodically for questions, and Jen will help give me the questions since I'm obviously not there and I can't multitask them and see what's in the chat at the same time I'm presenting. But if you miss those opportunities, feel free to go ahead and put your questions in, and we'll get to more questions at the end. So let's talk about how to lower your property taxes. I'm going to start with a scare tactic. This is how you lose your home to property taxes, the tax foreclosure process. So it starts with your taxes come due. And if you don't pay them by that due date, then the interest begins to accrue, and then penalties begin to accrue, and it just gets more expensive. And then there's a lien that's issued, and tax liens are often called FIFAs, which is just short for a Latin phrase, but basically it's just your tax lien. In Fulton County, those tax liens may get transferred to a third party, or they may hold them. But either way, whoever has that tax lien at some point, if they don't get paid, can levy on the tax lien, which is just the first step of doing a foreclosure on that lien. And they do it in the same way that they do mortgage foreclosure, auctioning it off on the courthouse steps. But the difference between a tax foreclosure and a mortgage foreclosure is that at the tax foreclosure, the person who owned the property before still has an ownership interest. They still have the right to redeem. And that right to redeem lasts at least 1 year. It could last longer, it could last decades. Basically, it goes until it gets foreclosed. And the foreclosure of the right to redeem is really just a notice that says that you have 30 days to pay the redemption amount. At this stage, it becomes so much more expensive because instead of just having to pay the property taxes and the interest and those kind of costs, suddenly you're going to, in order to get the house back, you have to actually pay what was paid on the courthouse step plus 20% on top of that. And each anniversary, it goes up another 10%. So it can go up tremendously in that one step. And if you're able to make that payment, then you redeem and you save your home and it's as if the tax foreclosure never happened. But if you can't come up with that money, they eventually will foreclose the right to redeem. And at that point, you have lost the house. At that point, you no longer have the right to be in the house. They have the right to come in and clear you out. They have the right to, they basically have full ownership at that point. And so what we want to do is try and empower y'all to not get to that stage. And the key to that is trying to keep the taxes as low as possible so that you can pay them when they're due. To understand where you can have an effect, you have to understand how the property taxes are calculated. So first, the tax assessors come up with what they think the value of your home is. And they do this every year. And what they're doing, if your home didn't sell the year before, then they're just guessing. What they're going to do is they're going to look at what properties were sold the year before, what the condition of your property, do some, fancy math, and figure out this is what they think your house is worth. That's going to be the total value. On that, they then tax you on a percentage of it. And for the most part, that percentage is going to be 40%. And that 40% is the assessed value or the taxable value. So that's the amount that they're going to actually be taxing you on. From that, they subtract any homestead exemptions that you're entitled to get that you've been approved for. And they take that directly from the amount of that assessed value. And so, the example here is the 50,000 senior exemption, and it would actually zero out the taxable value, which would give you a tax amount of 0. But whatever is left over after they subtract those exemptions, whatever is left over, they multiply times the millage rate. And millage rate is just a fancy word for tax rate. So they multiply times that, and that's how they get the amount of your taxes. In each category of your tax bill is going to have different millage rates, different exemptions, but that's how they're going to arrive at your taxes. And one thing you want to keep in mind is that not all those categories are going to get those exemptions, and certainly they're not going to get as good an exemption as others. So you want to pay attention to that. So the two places where you can have an effect is on the total value. You can appeal the total value to try and get that as low as possible so that the taxable value ends up being lower. Or getting the homestead exemptions. You want to maximize that number. You want to try and get all the exemptions you're eligible to get. And with those two things, it lowers your property tax bill. So again, the two ways to do this is going to be property tax appeals and homestead exemptions. And so today we're going to really focus on the homestead exemptions. I'm going to talk briefly about the tax appeals, but we're going to do a whole other session in a couple of months about the tax appeal piece of it. So, I'm only going to sort of hit the highlights on that. So let's talk about exemptions. The kinds of exemptions you're able to get really start with the basic exemption. Anybody who owns their home and lives in it is entitled to the basic exemption. You get that regardless of your age, regardless of your income, just by virtue of being the owner and living in the home as your primary residence, you can get the basic exemption. And that can already give you a big discount on your property taxes, especially the floating exemption. And I'll talk more about that in a minute. But you might also be eligible for some additional exemptions. And the additional exemptions are for people as they age or for other things that happen, life events that will trigger some additional exemptions you may be eligible for. So at the age of 62, 65, 70, you may be able to get higher exemptions. Also, if you're disabled, you'll be able to get some of those senior exemptions at a younger age. And then there's some for a disabled veteran or their spouse or minor children, or the unmarried spouse of a U.S. service member or firefighter or police officer who were killed in the line of duty. Those would be able to get additional exemptions. Now, a lot of these additional exemptions do have income limits. So you want to be aware of that. There is one for 65 or older that does not have an income limit. So at the age of 65, basically you can kind of upgrade your basic exemption to the senior over 65 exemption. But if you might be able to get one of the other exemptions based on your income, you want to get those. And you want to keep in mind that the income limits that are posted, for the most part, don't count Social Security. So if you're not working, if you're retired, there's a higher likelihood that you would be able to qualify for one of these additional exemptions despite the income limit. So it's worth looking into that. Why is the homestead exemption so great? The example that I like to use is from starts in 2018. And this is an actual tax bill for a person who had the highest senior exemptions back in 2018. And she's going along paying her taxes and, struggling to afford her home. And then in 2019, we got the floating exemption. And that one, and there were a few other tweaks to the homestead exemption process, but basically the floating exemption is the thing that made the biggest difference, because that one difference cut her bill almost in half. And the reason for that is that in 2019, she was actually able to lock in the 2017 value. And for those of you who've been in Atlanta for a while, you may remember the outrage that happened in 2017 when they tried to increase the value. People all objected. And so they had rolled them back for 2017, but then the values kind of across the county went up pretty tremendously in 2019. And so she or in 2018. So she was able to go back and get that 2017 value. And so in 2019, that caused this big drop in her tax bill. Your results may vary. You're probably not going to have that dramatic a difference simply because the increases may not be as dramatic now as they were from 2017 to 2018. But it gives you the idea that a floating exemption really does make a big difference in your bill. So what is a floating exemption? And I get this a lot. People ask me a lot about, floating exemption, value cap, freeze. What is the difference between these different terms? And especially the floating exemption and the value cap, because when they were passing that floating exemption in 2018, so that it would be in effect in 2019, the way it was described was almost always as being called a value cap. And so people were confused about, well, why didn't I get my value cap? Well, it's the same thing. The value cap and a floating exemption are the same. It's just kind of a different way of calculating it or a different way of thinking about it. And I have to admit that it makes more sense to me as a value cap. So the way it works is that basically you lock in a base year value. The one I just talked about, she locked in a 2017 one. In this example I'm using here, let's say the value this year is $250,000. The assessed value is $100,000. And let's say last year the assessed value was $50,000, and that's the one she locked in. So in 1 year, basically the amount of taxable value went up $50,000, but the value cap caps that increase so that it can only go up no more than 3%. The amount it can increase is based on the consumer price index, which actually has been less than 3% for all the years that we've been doing this. But I'm going to use 3% as the example because it's easier and it's the most that it could go up. So in this case, because she locked in the $50,000, 3% of $50,000 is $1,500. And so her taxable value could only go up to 51,500. So that's going to be the capped assessed value. That's where what you can see on the line that says value cap. With that, you then subtract any additional exemptions that she's able to get. And, in this example, this is the just the basic exemption. So you subtract the 30,000 basic exemption from the capped value to get the net assessment. That is the way it makes sense to me. But the way you'll see it on your tax bill is the top line. And so they'll show the total assessed value without that floating exemption. And then they take that difference between that assessed value and the cap value, and they add that into the exemption category so that it's there with the 30,000, and that gets subtracted from the assessed value. So you can see you end up with the exact same net assessment either way. And then that net assessment gets multiplied by the millage rate, and that's how much taxes you have to pay. So that's the floating exemption. Now, just to confuse you a little bit more, I'm going to throw in the freeze, because the freeze actually is a little bit different. There are a couple of senior exemptions that have a freeze involved. So I just wanted to throw this out there. A freeze actually does freeze the value at a certain amount. So in this case, let's say she had frozen the value at 50,000. It can't go up. It's not going to go up at 3%. It's frozen at that value. So that ends up giving you a savings. So, that's kind of the difference. Now, I will say, just today, I looked at the Fulton Assessor's website, and it looks like they're starting to refer to the floating exemption as a freeze, and that's not quite accurate. It's, it is a little bit different, but I think they're trying to get at that there is a limit on what the taxable value can go up. Okay. So now the question that I get, especially when I'm doing the tax appeal sessions, is, well, why do I care what the value is if I've got this value cap that's going to keep them from taxing me on the higher value anyway? And the reason is that does not apply to all categories of your taxes. So those of you in the city of Atlanta, you need to be aware that it does not apply to your city of Atlanta school taxes. So the city of Atlanta school taxes are still going to be increasing at the full amount that your value is increasing, regardless of this freeze. So I'm going to add in another example. So let's say the same person had the highest exemptions, the highest senior exemptions that they could possibly get on those city of Atlanta school taxes. That is still going to be less than what they would have gotten with a floating exemption. So the highest exemptions you can get is 75,000. That's going to be subtracted from whatever that assessed value is to get the taxable amount, the net assessment, times the millage rate. And that's why the school taxes are what they are. In the example that, if we use the basic exemption, then of course this would be even higher. So you want to be aware of what the tax office says your value is, as well as making sure you get the highest exemptions to be able to offset that. So I'm going to pause here because Jen and I have kind of a running joke that this always confuses people. So what questions do we have?
Yes, I've been doing this for quite a few years and I'm still confused at what a floating exemption is, so I would not be surprised. So for anyone in the Zoom, please drop your questions into the Q&A. And just as a reminder, I'll be trading off between those that are in person and on Zoom. So anyone here in person have a question or? Yes, ma'am.
I was told, it's gonna sound crazy, but I was told if you don't have children in school that you should be paying the school tax. Is that true?
So Stacy, this is definitely a question for you. One of our participants here in person said she had heard that if you don't have children in school that you should not be paying school taxes. Is that true?
That is not true, at least in the city of Atlanta. Basically, and it's not true generally for non-seniors. For the most part, people who don't have kids like me are still paying the property taxes for schools, regardless of whether they have children. But most areas have better senior exemptions that will exempt seniors from the school taxes, at least slightly better than the city of Atlanta. The city of Atlanta did, increase the amount that you can deduct, but with the exemptions, but they don't eliminate it. If the value goes above, I think if the total value goes up above like 189,000 or something like that, then you're going to be paying school taxes no matter what your age is, even if you're getting the highest possible exemptions.
Yes, sir. Did you have a question? Did you have a question?
Yes.
Yeah.
I think it's basically answered it. So as long as you're allowing them.
As long as you're like what? Yeah, so just to confirm, as long as right, correct. So Stacy, will you go back a couple slides and just refresh us on the different types of exemptions?
Just to piggyback
This one?
on that school tax.
Okay, so this is a refresher on the screen of the different types of homestead exemptions, excuse me. And then the question was the age or the senior exemption where the school exemption kicks in.
That's a good question. I believe even at the 62 or as disabled, you start getting some relief on the school exemptions. It increases as you age. I think 65 and older may be where you max out. I'm trying to remember what the 70 or older one does, but I don't think it's a school one. I think it does something else.
Yes,
I
ma'am.
have a question. Are the taxes going up from where they are now? What? Because I just paid $100 for taxes every year, and are they going up from there?
Yes, Stacey, this is, I think, a bit of a complicated question. So the question was, are taxes going to be increasing? This particular participant about pays $100 currently, and if she can anticipate an increase.
They are going up.
I mean, the odds are good. They are going to increase. Again, it's going to be a question of whether the value goes up and what your exemptions are. As the value goes up, the amount of your taxes is generally going to go up. For some categories, that'll be offset by the floating exemption. For others, it's not. And again, where I see the difference the most, it's the city of Atlanta school taxes. Once somebody's going along paying a very small amount in property taxes, and then as soon as they cross over that magical, like 190,000 value range, suddenly they're paying school taxes and the tax bills jump dramatically. Does that answer?
Yeah.
I will
Okay.
say, one thing to keep in mind is that you can also, talk to the different, the schools, the county, and the cities all set their own millage rates. And so that's another place where you can possibly save money, is if you can convince them to lower the millage rates. That'll lower the taxes.
Okay, so we have a couple questions on Zoom that we'll get to. I'm going to start with one we will repeat a lot, but I think is the most important for tonight. What is the deadline for filing for homestead exemption?
We will be repeating that a lot, and I'm going to answer that the deadline is April 1st, but I will give the caveat that technically this year, since April 1st falls on a Saturday, you have until April 3rd. So I want you to think April 1st in your mind. And then, but understand that you do have until that Monday.
I didn't know that. I didn't know it started on Saturday. Okay, so going back to the freeze that you mentioned, what is the time period on that?
So when you actually get that homestead exemption, what you're doing is you're locking in a base year, usually for the year before. And then from then on, like every year, it's gonna, the freeze or the the floating exemption is going to just increase a little bit. And now I just realized, did I answer, was the question freeze or floating exemption?
The freeze.
Okay. The freeze, I actually think the freeze is the 2-year one. I should have refreshed my recollection. There's so many different little exemptions. I have them categorized here by the age, but there are actually multiple exemptions depending on your age and your income. So, there's a 65 and older that applies to schools. So there's one that applies to other taxes. There's a lot of moving parts, and I can't keep them all in my head. But yeah, so really, but when you get the freeze, for as long as it lasts, it's going to stay with that base year. As opposed to the floating exemption, the amount's going to creep up a little bit each year. Either way, though, it's a good savings on your property taxes.
Shifting topics a little bit. This question is about liens. So are they released if you pay the taxes owed within the time limits after you receive a FIFA?
Yeah, as soon as you pay off a lien, it should get canceled. And so there should be a document recorded in the lien books to say that that's been released.
Perfect. And then I think this may be a good segue question for us. Do you apply for the exemption annually?
Well, the answer is no, you do not apply for it annually. I will say for almost all categories of exemptions, once you apply for it, it's there for good. There is one single Fulton County exemption that is for 65 and older, low income. That is a 2-year exemption. And so every 2 years you have to reapply for that. And that actually only applies to, I believe it's the Fulton operating expenses, part of your tax bill. And yet when you miss that 2-year renewal, Fulton County right now is wiping out all of your homestead exemptions, which I think is wrong because the other ones should still continue. But that's the way they're handling it. There is apparently some work in the legislature to maybe change that. So that may change in a couple of years. But for now, if you're 65 or older, you want to be sure to check with the assessor's office to see if you're getting the one that expires so that you reapply for it before it expires. Okay. Do we move on or is there more?
Yes, I think this is a good stopping point to move on.
Okay. Let me skip ahead in my slides. Okay. So now this is the one that I want to stress. Who is eligible for the homestead exemption? It has to be your primary residence. It has to be your home. It has to be, where you live, where you vote, where your car is registered, that sort of thing. So it needs to be your main home, and you cannot be getting exemptions at more than one place. Wherever you live is going to be considered, or wherever you're getting the homestead exemption is going to be considered your primary residence. And as I said earlier, I tend to use this phrase that actually makes me cringe, but it's the easiest way to say it. Usually, when we think of the homestead exemption, the phrase that we use is if you own your home and live in it, then you can get the exemption, and you can. But this idea of a bona fide claim to ownership is actually broader, and the law actually allows for exemptions for people who don't necessarily have a deed in their name. Now, certainly, if you do have a deed in your name, you're eligible for the homestead exemption in your home, whether you're on the title by yourself or with others. So, if there are multiple people who own the property, any one of them who lives in the home can get the homestead exemption. Now, only one person is going to end up getting the exemption for the home, no matter how many people are on the title and living in it. But the point is, even if you're the only one on the title who's in the home and the other people on title live other places, that's not going to keep you from getting the exemption. You should be able to get the exemption as long as you have some share of the title and you're living in it. There is one exception to that, and that relates to spouses. So I'll be talking more about that in a minute, but just keep in mind that there is a little bit of an exception, but for the most part, if you own your home, if you have a deed in your name, then you're going to be able to get the homestead exemption. But you don't actually have to necessarily have the full title in your name. If you have a life estate in the property, then you're eligible for the homestead exemption. Also, if you have a contract for the purchase of your home, and the end result of that contract is going to be that you own the home, then you are eligible for the homestead exemption. So clearly, if you have if in this case, you don't yet have that deed in your name, you should still be able to get the exemption. And I think more importantly, if you are a person who lives in a property owned by your parent who is deceased or incapacitated, then you should be able to get the exemption regardless of whether the property has been distributed. Now, if the property had been distributed, then the deed would be in your name. But if it hasn't been distributed, then you should be able to get the exemption anyway. So I'm sorry, I'm sounding a little angry probably, because these are one of this and the next one are the ones that really, I think, would help a lot of legacy homeowners be able to keep their homes while they're dealing with whatever the tangled title is relating to the heirs property issues that we hear about. So this would be an easy way, and yet we're finding that the county does not necessarily allow these exemptions without putting up a fight. But this is in the Georgia law. Okay. So the other one that I think particularly will help the legacy homeowners is that if you're in the home that you are going to inherit and the property is currently being probated, so there's an administrator, an executor appointed, you're still eligible for that homestead exemption while that probate is going on. Because if the heir or beneficiary is living in the property, they should be able to get the exemption while there's a administrator and executor. Also, if there's a trust where the property is put into a trust and the beneficiary is living in the home, they should be able to get the exemption, even though they don't actually have a title in their name. The deed is actually in the name of the trust. They just need to show that they are the beneficiary under the trust. And finally, the spouse of a homeowner who lives in the home should be eligible for the homestead exemption, even if that spouse isn't the one who owns the home. But, and this is the big exception that I mentioned before, spouses are basically considered one applicant. So if either spouse is getting an exemption, the other spouse cannot. So even if you and your spouse are separated, you each own your own home, you have nothing to do with the other person's home, these are your primary residents, even in those circumstances, only one of you is going to be entitled to the homestead exemption. So you want to keep that in mind. But other than that, multiple owners should still be able to get the homestead exemption. So I want to pause because, again, this is the part that I really get worked up about. Jen, are there any questions about this specifically?
Any from our audience about this part specifically? Yes, ma'am.
Yeah, I was looking at the spouse of a homeowner who lives in a house that they only can have one exemption. What's that like?
Say that again.
Spouse of a homeowner who lives in a house. My husband's back, that's what I want to say.
Okay.
And I was trying to get some work done in my house. And everything had to be in my name. They wouldn't do, then they still didn't do it.
Okay.
Cause I had to give them everything I own to get the work done. But, and I was just thinking, God has fixed it so, I'm not gonna get it done. But because they wanted everything in my name, none of my children could have anything to do with it.
Mm-hmm.
So, I was kind of skeptical about that. Because if I was died in 5 years, because we had a 5-year thing, would they have taken my house, or, because it's not in nobody's name but mine?
Sure. I'm trying to think of how to rephrase the question for you. So,
Well, I think I heard it. It sounds to me like what she's complaining about is that it probably a grant program to help make home repairs required her to have full title to be able to get the work done.
Right.
And so she had to probably get her children to deed the property to her. So I'm guessing that, well, and the short answer is that the homestead exemption laws are separate. Really, the requirements for getting home repairs done is going to be based on contract and what the rules of that these different programs are. They're probably also going to be based on the probate laws for who would inherit when somebody passes away. What I'm talking about is just homestead exemption. And the homestead exemption statute specifically says that, actually, it specifically says that if the property is in the name of the wife, the husband can still get the exemption. I would read that as not being as sexist as it sounds, and that either the husband or the wife can get the exemption, even if the title is in the other spouse's name. But that's what that is, that homestead exemption law is talking about. So there's not a whole lot I can do about the issue that she raises.
yes, sir.
How difficult is it to prove disability?
The question is, how difficult is it to prove disability?
There's actually when you're applying for the disability exemption, there is a specific form that they want you to have your doctor sign and have notarized, and then you submit that. And basically, it's just getting the doctor to sign something saying that you are disabled and unable to work. And as long as there's a doctor willing to sign that, that's all you have to do to prove it.
Hopefully not too difficult. So that is, there is one specifically for disabled persons. So the question is, will you have to pay the taxes with that homestead exemption or not? Stacy probably will answer that more eloquently than I was going to.
I mean, what the homestead exemption does is it reduces the taxable value, which then will reduce the amount of taxes you have to pay. You probably will still have to pay some taxes depending on the value of the home and the types of exemptions you're getting, but it'll significantly reduce the tax value. There's a woman, Charnette Trimble, who runs a nonprofit called Grandmama's House, and she refers to the homestead exemptions as a big fat discount check, or just big fat discount coupon. Because it really is, it's like you're walking into the store with your coupon and saying, reduce my my bill by this amount, and that's basically what it does. So you don't end up getting it free with your big discount coupon, but it'll be a lot less than what it was going to be.
Perfect. So I'm going to shift to a couple of Zoom questions, and there are a few in the Zoom. I just want to acknowledge I do see them. I'm going to save them to a little later in the presentation, just so we can make sure we're moving forward and respecting everyone's time. That maybe are a little bit about property tax appeals versus homestead exemption. So one question we have is, if the parents own their home and this participant's home, but they live in their secondary residence, can they have two homestead exemptions?
No. I just want to make sure I understand. Both homes are in the names of the parents. The only way that someone would be able to get the exemption in a home owned by a parent is if the parent is deceased or incapacitated. And so probably they're in their own home, living their lives without, being totally incapacitated. So the answer is no. the parents would be able to get the homestead exemption in their own home, but not in the other property. Now, if they added the kids to the title, then the kids could get the homestead exemptions. They wouldn't get the same exemptions that the parents would get, assuming that, like, if the parents were seniors and could get the senior exemptions, they wouldn't get that unless they were also seniors. But that would be one way to get the homestead exemption.
And then referring back to the exemptions for the disability exemptions, if you get SSDI, can that be used for the disability homestead exemption as well?
So technically, Fulton requires their specific form so that they want it signed by your doctor. I don't know if they would accept that Social Security has already acknowledged that you have a total and permanent disability, but the short answer is you would have to ask them if that would be enough, or if they're going to require you to have your doctor sign this other document as well. But the important thing, the good news for people who don't yet have the Social Security disability approval, they can still get the homestead exemption disability just by having the doctor sign that form.
And then one last question here, which is a great question, then we'll move to your next section. If you and your partner have separate homes, each with homestead exemptions, and then you get married after, would one of the spouses lose one of those homestead exemptions?
Yes. And this is one of those that, sometimes the counties don't realize it, but technically you're not entitled to the homestead exemption for one of those houses, even if you're living separately. Technically, only one of you is eligible for the exemption. So it's just an unfortunate way the law is written.
Thanks, Stacey.
Okay, so let's move along. You do have to live in the home. There's some exceptions to that. Most of these really apply to, like, later. Let's say you've been getting the exemption for a long time and then you're out of the home for health reasons. You're still entitled to that homestead exemption, even though you're out of the home for some period of time. Or if you're in the armed services, if the home is uninhabitable because of some sort of like fire, flood, storm, something like that, basically you have a year to get it fixed and get back in the house. The others don't have that same time frame, but basically they're acknowledging that there are reasons why you'd have to be out of the home, but it would still be technically your primary residence. If you didn't have these things, then you would still be there. So let's talk about how to apply. We recommend applying online, and I'll talk a little more about the online application because I think it's a good way to do it. But that you can apply online using the Fulton Assessor website. They have a program called IAS Smart File that allows you to apply online. You can apply by mail, so you can get a paper copy of the form. Online, you can download a PDF and print it out to get the paper copy, or you can get a paper copy from your tax office. And you would need to mail that in. If you're going to mail it in, you want to be sure that it's postmarked by the deadline, which again is April 1st. But technically you have till Monday, April 3rd, because it falls on a Saturday. And so you want to be sure that that postmark is no later than April 3rd. And putting it in the mailbox on April 3rd does not necessarily get you that postmark. And I would recommend that you mail it in a way that you can prove that it actually was postmarked on that day. And that it was received by the tax office. So like certified mail with return receipt requested, so that you have proof that it actually was mailed on time and received by the tax office. You can also apply in person, and you can go to any of the tax offices at any of the service centers, and you should be able to apply for the homestead exemption. And they should take the application, even if it's one that they're planning to deny. My experience is that a lot of times they won't take the application if they don't think that you should be able to get it. And they don't think you should be able to get it if you don't have a deed in your name. So for people who are in that category, I definitely recommend doing the online application, because then you know that it's been submitted, and then you can fight with them to try and get it approved. But if you go in and they refuse to take the application, I would push back and say, you should take my application, even if you're going to deny it. And if you still have problems, you can call us. But for, especially for the run of the mill homestead exemptions, you can go in and they'll actually, they can either give you a paper copy of the application, or they'll usually just go through on the computer with you and enter all the information. And they will, if you are approved, or if it looks like you're going to be approved, they'll give you a little confirmation that you've actually applied. If they refuse your application, make sure that you have signed in, or that there's some sort of indication that you actually were there trying to apply for the exemption before the deadline. But so anyway, so you can go to any of the offices to apply. You want to also check with your cities to see if you might be eligible for any extra exemptions there. Most of the cities will rely on the county for the exemptions, especially the basic exemption, but a lot of them also have their own requirements, their own forms for the senior or other exemptions. And so you want to be sure to apply for those with the city so that you're getting the exemptions on all the taxes. But anyway, so I would always just check with your city to see if there's any that you need to do separately. Again, I think the online application is probably the best way to do it, because you do get an instant confirmation that you've actually applied. It also allows you to apply even if it's not in the traditional kind that the county wants you to apply with. And so the way you do an online application is you start with the Fulton Assessor's website, and that's fultonassessor.org. And on that website, you're going to look for their menu, and it has online services. When you click on that, it's going to bring up the online services page, and you're going to click on the thing that says, click this link to access SmartFile. The SmartFile is the system that you're going to use for the online application. When you pull that up, it's going to, you have to log in. And so if you've used the SmartFile system in the past, you just put in the email address and the password that you set up before, and just go right on in and do it. If you've never used it, then you can set up a new account. You're going to need to have an email address though, and it's going to need to be one that you can access, because what will happen when you click on create an account, it's going to come up and ask you to enter an email address and to go ahead and set up your password. Then it's going to email that email address, and until you click the link from that email, it's not going to let you in. But once you click that link, then you can go back and you enter the email address and the password again, and you're in. If you have used the system before and you don't remember your password, it's actually really easy. If you click the forgot password, it makes it really easy to just reset the password. So once you're in, it's going to automatically come up at available filings. And with the available filings, there's a whole bunch of things that you can do. You want to look for the one that's homestead exemption. Click on that. And that's the next thing it wants to do, is look up what property are you trying to claim the homestead exemption on. And so it's going to give you 3 options for how to search, but it kind of looks like you need to fill all 3 in. You don't. You just need to use one of them to be able to pull up your property. So you can, if you know the parcel ID, you can put that in. If you, you can use the owner's name, or you can just look it up by the address. I will say their search methods are a little persnickety. So sometimes you'll put it in and there's a space where there shouldn't be, or, something weird, and it won't come up. So what I try to do is put as little information as possible to pull it up. And then it's going to come up with a list of search results down here at the bottom. And you're going to just look for your property in that. If it doesn't come up with your property, go back and retry the search criteria again to see if you can figure it out. So things like owner's name, if there's 2 owners, they'll have, it's really only searchable by one of the owners, which is ridiculous. So, if that doesn't work, try the address. And, with address, a lot of times what I'll do is I'll just put in the very basic part of the address. So let's say you live at 25 Dutch Apple Road. I would put in like Dutch and 25 is the street and the number, and see if that worked. Because the more things you put in, the more likely you are to run afoul of whatever weird persnickety things they have. Anyway, so once you pull up your address, you'll click on that, and then you're just going to go through and you're going to answer all the questions that that it asks, and they're very simple questions for the most part. You don't really have to stress over what's being asked. The one place where it gets a little bit confusing is when you're trying to apply for the additional exemptions. There's a specific question that asks if you wish to only apply for the age 65 exemption with no income requirements. And I mentioned earlier that there is one that it's basically the basic exemption up a notch once you hit 65. So even though, it doesn't matter if you're still working or, what your income is or anything like that. If you're over 65, you can get this sort of enhanced basic exemption. If that's what you're trying to apply for, you want to answer yes here. If you're trying to apply for one of the exemptions that have the income limits, then you want to say no, which is confusing because you're applying for a 65 or older exemption, just not this one. So, but you say no. And once you say no, then you can answer yes to this one down here. So they're asking, do you wish to continue with applying for these additional exemptions? And so if you're applying for any of the additional exemptions that require the income limits, or the ones that deal with, disabled veterans or the spouses of deceased firefighters and things like that, you want to say yes here. And then it's that once you say yes, then it's going to bring up the questions about what age you are and the, whether you qualify for any specialty exemptions, and it'll walk through the questions one by one. Once you've answered all those, then you hit next and just keep going again. Again, you kind of go through the screen, just screen by screen, reading the stuff and answering the questions. The other place where you may run into a little bit of a snag, especially if you're not that comfortable with computers, is adding the documents. When you're doing an online application, you're going to need to upload those documents. They do try to make it as easy as possible. Basically, you can, upload. You could scan the document into your computer, and then you look in your, browse in your computer to find it. Or if you've taken a picture and it's in your photo library, you can look for it there. Or you can even, use the take a photo or video and take a picture right now of that document and have it upload into the system. The types of documents that you're going to need to add, everyone is going to need to add their ID, so some sort of state issued ID. They're actually very strict about wanting to have a valid ID. So if your ID is expired, go ahead now and get a new one, get it renewed so that you can show that you have a valid ID. If there's going to be a problem, you can try uploading the expired one and explain that, I need more time because I'm disabled and I need to renew it, or some sort of explanation about why it's not a valid ID right now. You're also going to need to upload the vehicle registration. So even though this is the tax office where you pay your tag fees and things like that, they don't really have access to the state records for the vehicle registrations. So they actually want to see a copy of any vehicles that are registered in your name, and it needs to be registered at that home. The next thing they have is supporting documents, and this is sort of the catch-all. This is if you're applying for any of the exemptions that require the income verification, this is where you're going to want to be sure to upload all of that income verification. So they're going to ask for your tax returns if you file your income taxes. If you don't file your income taxes, then you need to upload your benefit award letters. So, Social Security award letter, railroad retirement award letter, whatever benefits you get, you need to upload those things. This is also where you can supply anything else that supports that you're eligible for the homestead exemption. So this is where I believe you need to put any documents that show that you're eligible if you're one of those categories that doesn't have a deed in your name. So this is where you're going to want to upload anything that links you to the the exemption that you're eligible to get. And so let's talk a bit about, so what is the documents that you need? You're going to want to show the documents that show your ownership interest. If you have a deed in your name, that's going to be the document they're looking for. If you've had the deed in your name for a while and the tax office already has your name on file, you probably don't need to upload that deed. But if you bought the home recently, then you probably do want to upload that deed just so that it's clear that you do have the deed in your name. If you're in a category that you don't have the deed in your name, I recommend getting whatever that last recorded deed was, and then show the documentation that proves that you're eligible based on that. So let's say the deed is in your mom's name, mom passed away, and you're the child living in the home. What you'll want to do is you'll have the deed to mom, you'll have the death certificate showing that mom passed away, the birth certificate showing that you're mom's child. And if there's any probate going on, those probate documents, the will, whatever you need to be able to link it to that last recorded deed. Same with if there's a contract for deed, you want the recorded deed showing that the person who has contracted with you was the title owner. You have this contract for deed, and you should be eligible for the homestead exemption, or the trust documents that show that the deed is in the name of the trust. You're now eligible for it because you're the beneficiary of the trust. Because these can be really complicated and you're uploading a bunch of kind of random documents, I find that it should be helpful to add a statement that explains what you're doing. So saying, I'm the child of the deceased homeowner, so I should be eligible for the homestead exemption, and to show that I am including these documents, and sort of walk through why you're putting things in. That should help, and I'm hopeful at some point that it will start helping. Again, right now, Fulton County, for the most part, is not accepting these applications at first glance, even with my wonderful explanation explaining all of this. But I feel like it makes it easier if I have to appeal, that I can show, not only did I submit all these documents, but I also submitted an explanation. And, once they kind of go back and look at it, sometimes they'll approve it without having to go through the appeal process. Okay. If while you are filing your application, you decide you want to stop for a minute, you can do that. You can log out. As long as you have not hit the submit button, you can actually log out and come back later and continue on. What you want to do is when you log back in, instead of going to available filings, you're going to go to my filings. And under my filings, you're going to look for that homestead exemption application that is still pending. Actually, I think it'll say draft. Click on that. And once you're in it, if what you're trying to do is to add attachments, because a lot of times you go through and you answer the questions and then you realize you need to attach something and you've forgotten that you didn't have it handy. And so what you want to do is, once you have the application open, you want to look for the attachments tab and go to. You can also just walk through the different pages to get to the attachments tab, or you can just click on it and go directly to there and start uploading the documents. You do want to be sure that you hit submit when you're ready. Submit is is the only way it actually gets submitted. Until then, having a draft or having a draft entered before the deadline does not get you anything. You have to hit submit before the deadline to be able to say that you've applied by the deadline. So don't hit submit until you're ready to hit submit, but be sure to hit it before the deadline. Again, I recommend that you do it before April 1st, because that's technically the deadline, but you do have until Monday, April 3rd this year only. This is not for any other year. So keep that in mind, but if you do it by April 1st, you've definitely made it by the deadline. Once you have hit submit, it's going to come up with a confirmation page and it's going to give you the option of printing it then. You can print a draft before you hit submit, or you can wait until you've hit submit and print it at that point. I definitely recommend that you print what you're filing so that you have proof that you did that. Personally, what I do is I do it as a PDF and just save it on my computer so that I know that I have a copy of what I submitted. But again, be sure to hit submit. Once you have hit submit, it's going to come up with a big confirmation page. So you want to, be sure that you have that. It's going to say, your application has been submitted. You can also go back and check on it by looking in the message center in my filings. When you hit submit and you get that confirmation page, you're going to notice that there's a 1 on the message center tab, because it'll automatically generate a message to your message center that says that your application has been submitted. And with that application having been submitted, it's sort of automatically the confirmation that it's there. Now, anything that's being sent to the message center is also going to be sent to the email address that is linked to that message center. And that will make sure that you actually get the emails that they're giving. So you want to go and check for that email in your email, that, the confirmation email. But I will say a lot of the messages that are generated by for the message center end up in spam folders. And so it's possible that you'll miss them. Setting it up initially so that it'll recognize that minimizes missing it. But I also recommend going back periodically and just checking the message center. All you have to do is log back into the smart file system, check the message center, see if there's any messages there, because if they have questions or if they need additional documents or anything like that, they're going to send a message through the message center. You can also look under my filings. It'll have the application. It'll show that it's been submitted and pending review. If they're asking for more documents, then it's going to show that it's documents requested or something like that. It updates the status according to what's going on. So it gives you a little bit of a clue what's happening with your homestead exemption application. So it's worth going back periodically and just checking what's in smart file. Again, the deadline is April 1st. Normally on the screen, I just focus on that April 1st, but you can see that we actually do have the next sentence, which is or the next business day if it falls on a weekend or a holiday. And this year is one of those years when that does happen. So you do have until April 3rd, but get in your head that you need to do it by April 1st so that you definitely make that deadline. There are some exceptions, but mostly it requires that somebody notify the tax assessor's office ahead of April 1st that you're going to be late. And so, if that's the case, just see if there's any way to be able to file the application before the deadline. You want to be sure to get proof that you did file by the deadline. So again, if you're doing it on the computer, you'll get that confirmation email. You can keep that and be able to show that you actually did submit it. It'll have a number for the filing, so you can prove that this is what you filed. And also I recommend getting a copy. But if you're doing it in person or by mail, make sure you're doing it in a way that you get some sort of proof that you did file it. If you are denied the homestead exemption or not allowed to apply for it, then you want to be sure to appeal it. And the main place you're going to do that is if your notice of assessment does not show the exemption you applied for. And before I get into that piece of it, I'm going to check with Jen to see if there's any more questions.
Yes, and I am going to flip-flop and start with my Zoom participant questions. So this is kind of along this same lines. Someone filed last year, never heard back. Online, it still says your filing is currently under review. You'll be notified via email when the review is completed and the status of their request. Do you know why that may be or any recommendations for them?
The reason for that is because they do get very backlogged. And so particularly where it's kind of a confusing thing, they may not process it very quickly. I have a number of cases like that myself. What you can do is call the assessor's office and ask about the status of your application and see if there's anything, that you need to do or that, you can do to get it moving more quickly, especially if you had to pay your property tax bill without the exemption that you applied for. You want to try and get them to move it so that you can get that refund.
So another question here, we say they see that there's an exemption for a child of a disabled veteran. This covers the adult children who do, the question is, does this cover adult children who do not live with their disabled veteran parent?
It does not. And in fact, the disabled veteran exemption specifically says minor children. So for that one, it's only going to be for the minor children of a disabled veteran. The one about the children of a deceased or incapacitated parent, that does not specify if it's adult children or minor children. So I will read that as being different. And so it should cover the adult children as well as minor children. But the disabled veteran one is very specific. There's only minor children and the spouse.
Any in-person questions? Okay, there are a couple more in the Q&A I just want to acknowledge, but I'm going to save those to the end just so we can cover our homestead exemption topics. So carry on, Stacy.
Thank you. So let's talk about the notice of assessment. And this is, I'll touch on the tax appeals in this segment. So, so any questions about that would be a little bit more timely after this one anyways. So when you file your application on or before April 1st, the next thing that you're probably going to get is probably going to be your notice of assessment. Usually these come out in Fulton between May and June. The past few years, they've all been in June and kind of getting later and later. They keep swearing that they're going to do it earlier this year. So it may come out in May or, who knows. But the point is that probably this is going to be the next thing you get after you file your application. It is entirely possible that they will still be processing your homestead exemption application. As you heard from that question, there's somebody who applied last year and is still waiting on the decision. So what is in the notice of assessment does not necessarily mean that they have decided on your application, but this is your main opportunity to appeal. This is when they're going to, send you notice of what's going on with your property. So you want to be sure to look there's a specific box for homestead exemption. And in that box, it's going to have either yes or no. And if it says yes, it's going to give a code. If it says no, that means that they're saying there's no homestead exemption on this property as of the creation of this notice of assessment. So if you've applied for an exemption that you should have gotten and it says no, you want to appeal that. If it says yes, it's going to give a code that's going to be very hard to decipher. If it says HFO1, which is what's on this example, then that's the basic exemption. And if you applied for a higher exemption than that, then you want to appeal. If it says some other number, HF10, HF9, whatever other numbers, those may be the right exemptions, but it's impossible to really tell. And I've asked the assessor's office a number of times for a better list of what each of the different codes means. You can actually go on their website and get a copy of the list of codes. It's just as indecipherable as the code itself. So basically what their answer is that if anybody has questions about that, you should call the assessor's office and ask them if you're getting the right exemptions. Again, just because they have it here doesn't necessarily mean they decided on your exemption, but I would recommend going ahead and appealing And then you can withdraw the appeal if the exemption gets approved. The reason I say that is that if somehow they never decide on your exemption, or if things just have gotten lost or something like that, this is your chance to make sure that it does get heard. If you don't end up getting a denial letter that you could later appeal, this is your chance. You want to be aware of the deadline, and it's going to be on the notice of assessment as well. It's going to give you the date that it was issued and the deadline. And the deadline is always going to be 45 days from whatever date it was issued. That varies from year to year. So the deadline is going to vary. It's not like the April 1st one. I can't tell you when it's going to be. We don't know until they actually issue the notices. But you want to pay attention that whatever deadline is on this notice is the one you need to take seriously. You need to get that appeal filed by that deadline. No matter, even if you don't get the notice right away, you still need to make sure that you get the appeal filed within 45 days of it being issued. This is also true if you don't get it at all. So you want to really be aware of when the notices are coming out and what they say. It's going to say, this is not a tax bill. You still want to pay attention to it. A couple other things that I want you to pay attention to when you get the notice of assessment. It's going to tell you what they think the value is. And I've already told you that that's the other way you can reduce the amount that you have to pay in taxes, is that if the value is going up, you want to think about appealing that and see if you can keep it from going up as much as they say. So you want to look at it'll show you what the value was last year, and then what they're saying the value is this year. And if there's an increase, you want to think about appealing. It'll also give you an estimate for the taxes due. So that's going to be the using the new value and the millage rates from last year, because they don't yet have the millage rates for this year. They're going to try and estimate what your taxes would be if this value had been in a place basically last year. And so it gives you kind of a good idea of what you can expect that increase to do. Now, if you've applied for an exemption and it's not showing it, then that tax bill may be very different. But again, it gives you an idea of why you should be appealing if it doesn't show your exemption. And so again, we'll do another session on appeals more specifically, but these are all the things that you're going to be looking for and considering to appeal. And I'm going to do just a real quick little nutshell of the tax appeal. What is a tax appeal and that sort of thing. So tax appeal is your chance to argue for a lower total value or to show that you're eligible for a homestead exemption. So that's going to, either of those things, if you win, will end up lowering your property taxes. So it's worth appealing. You do have to appeal within 45 days of when the notice of assessment is made available. That date changes from year to year. It's from when it's made available, not from when you receive it. If you appeal the value, that value is frozen. And again, that's a freeze. It doesn't increase for the next 3 years. So, or for the 3 years. So it's the year that you appeal and the 2 years that follow that. It's all going to be locked in at whatever that end result of your appeal is, as long as you see the appeal through. You have to actually see it through. You can't file the appeal and then just decide, well, I'm not going to show up for the hearing. You either have to show up for the Board of Equalization hearing, or you need to reach an agreement with the assessor's office that you agree to a value and having that 3-year freeze. A lot of people are afraid of the Board of Equalization, and so they decide not to do it, even though they're giving up the freeze with that. The Board of Equalization is not scary. It's just 3 taxpayers like you who have been hired to hear these cases. So, they have a lot of the same concerns you do. As long as you can present some evidence that supports a lower value, correct the information about your home, compare your home to other properties in your neighborhood, something that would give them something to hang their hat on, usually you can get it down at least a little bit. And at the very least, even if you lose, you end up with that 3-year freeze. So you're going to win, as the values go up and up and up. This is a good graphic of what we're talking about when you're doing a tax appeal. basically you want to present evidence that shows that your home is kind of the modest home that you know that it is compared to the grand palace that the tax assessor's office seems to think it is. This is the sort of tax, year and a year at a glance. Basically, January 1st is going to be the date for when everything needs to be locked in. So if you are 65 as of January 1st, then you can apply for the 65 or older exemptions. If you turn 65 on January 2nd, you can apply this year, but it's not going to go into effect until the following year because you have to have been that age as of January 1st. Your ownership interest has to have started as January 1st. They're going to try and figure out what the value would have been as of January 1st. April 1st, again, the deadline for the homestead exemptions. Sometime after that, that's when they're going to come out with a notice of assessment, and then you have 45 days to appeal. The thing I wanted to point out on this timeline is the end of the appeal deadline is before you get your tax bill. So by the time you get your tax bill, it is too late to appeal. So that's why you really need to pay attention to the notice of assessment. Even though it says it's not a bill, it's going to have a tremendous effect on your bill. If you do appeal before that deadline, then the tax bill that you get is going to be a temporary tax bill, which means that it's going to be either 85% of the value or last year's value, whichever is lower, rather than being that full value. And so if you're getting a temporary tax bill, you need to pay it while the appeal is pending, and then be saving in case the end result is a little bit higher. There's going to be a time frame for the county to respond to your appeal and then schedule it for the BOE hearing. The BOE hearings can be going on until well into the next year. The past few years has actually gone, well, and with the pandemics, it actually went into the following year. Like a year and a half after you had appealed. They're doing better this year. They should be finishing up the 2022 hearings pretty soon. But so you're probably not going to get a result until well past that the time your regular tax bill is issued. And at the end of the whole process, they're going to send a final bill. And that final bill is going to be based on whatever that last value is. If you owe more, then you're going to need to pay that. If the end result is less than what you paid in your temporary tax bill, they'll send you a refund. We are right here. April 1st is the deadline. Until April 3rd, but April 1st is the deadline. So please file your homestead exemptions as soon as you can. There are two tax deferral options. I just want to mention quickly. They are very limited because they have income requirements. Well, they're available only to people who are 62 or older, and they have income requirements. And in this case, the income is all of the income. It's not, they don't disregard like Social Security or anything like that. It's the gross income, and it limits how much you can defer based on the value of the home. So, it's an option if you really can't pay the taxes, but it may not be for everybody. Okay, quick recap before we get into questions. So homestead exemptions get subtracted from the taxable value, and so that's going to save you money on your property taxes. You must apply for the exemptions, even the basic exemption. They don't automatically give it to you. You have to apply for it. And then you need to reapply as you become eligible for any additional exemptions. Or if there's any change in your eligibility, you need to let them know. You also want to be sure that if you're in that one category where the exemption expires, that you get that renewed every 2 years. Once you hit 70, you can get the 70 or older exemption and you no longer have that restriction. The deadline is April 1st for the current year. Now you can still apply after April 1st, but it's going to go into effect for the following year. So that's why I really focus on April 1st as your deadline to be able to get the exemptions for now. You do want to appeal if you're denied or not allowed to apply for the exemption that you are qualified to get. So. And I'll also mention that we have some workshops coming up that will have in-person consultations where people can actually come and get help filing their homestead exemption application, especially if they need help with the online stuff. And Jen will be sending out all the information. Sign up for those. So, are there questions?
You know, when can you go to get it filed? I see it on. It's there now.
Yes, so for the help sessions that you guys see here on your screen, we'll be sending out more information. You can also register on our website, where probably many of you registered before. For any of you in person, I'll probably defer you to my colleague off screen, Marianne, to help you get signed up for those. But please come join us and we'll help you walk through the process if you feel like you have more questions or need any more assistance. And then just to recap what Stacey was saying, we will be doing exhaustive information usually over the summer about tax appeal process. So if you have any questions, make sure you're following us or reach back out. Probably come the May, June, July timeframe is usually when they are. So questions. I'm gonna recap some of the Zoom ones first. Okay, so these are a little bit tax related. Okay, so I'm gonna pause this for a second. Any homestead questions here from Zoom or in the audience?
But can't you go to Greenbrier to do a homestead and senior homestead exemption?
Great question. Stacey, do you know if you can go to Greenbrier to do the homestead exemptions?
Yes, they have now opened that office to be able to do the homestead exemption. So yes, you can.
Okay, so going back to some of our Zoom ones that I promised we would get back to. So calling back a little bit to the beginning of the presentation, we were talking about the tax liens. Do you know if the city or county sends out the notification once that lien has been lifted?
They do not. Basically, once the lien has been lifted, they should file something in the lien records. So you can check with the courthouse to see if there's a cancellation filed. The main thing that you should do if you paid off a lien, ask the tax commissioner's office if you can get some sort of confirmation that you've paid it off, and keep that documentation that you paid the full amount. If you're dealing with a third party who's not the county, some of them are actually much better at filing those cancellations than the county is. But you want to be sure to ask them for confirmation that it actually has been canceled, so that you can be sure that it's there and that it's been resolved. And then if you want to, you can actually ask at the courthouse about getting a copy of the cancellation, or online, the Georgia Superior Court Clerks Cooperative Authority, gsccca.org, has online records that you can actually go in and access, and you can search the lien records for your property or your name, which will then get the property.
Great, and then we have two tax appeal related questions. So this one is specifically about a company called Ownwell, but I know that there's quite a few out there that say that they'll charge a certain amount to help with your property tax appeal. So I guess, do you have any advice for anyone if they get anything like this in the mail to know if this is a legitimate service and who they can trust?
I mean, there are a lot of lawyers and non-lawyers that assist with tax appeals, and a lot of them are legitimate. It's really up to you whether you want to do it on your own or hire somebody. As far as checking to see if how reputable they are, and maybe ask for any sort of recommendations from prior customers, or check the Better Business Bureau, kind of your normal checking into things. Google the name, see if there's a lot of complaints about them. I would be very careful, before paying them, that you do check on it. But there are a lot of them out there that do a fine job. One of the things that I try and stress when we're doing our tax appeal things though, is that it's not that scary. You can do these on your own. So it's just up to you whether you want to do it on your own or pay somebody.
The only thing I would add is join us for our info session over the summer and just learn more about the process. And like Stacey said, see if you're comfortable with it. So one last tax appeal question here. If the house was appraised and the tax value is close to the appraised value, can you still appeal? And is there an advantage to doing that? I'll just say for this one too, please join us over the summer when we talk more about tax appeals.
Yeah, because the short answer to that is that you can still appeal even if your appraisal is higher. It just depends on on the different information about your home and what's going on. And you'll learn more about that when we do our session.
Much more about tax appeals to come. Any final questions from our in-person audience? Great. Well, thank you both, no matter how you joined us tonight, whether you're on Zoom, Facebook, or in person. We really appreciate your time. Of course, thank you to Stacey, our local tax expert. She is very knowledgeable, so we appreciate your time. And like we said, make sure you file by April 1st, and we'll just forget April 3rd is even an option to make sure you guys get in time. So thank you guys, and I hope you all have a great night.